This is Made for More Living with Johnny Jennings. Online at madeformorerealty.com.
50-year mortgages. Oh, man, people have been talking about that now for the last week or so.
Well, I mean, I get it. To me, at first glance, it doesn't seem like a terrible idea. We've got an affordability problem, right?
Yep.
Interest rates are too high.
Sure.
And so first-time home buyers especially, they're struggling to move into a home, to purchase a home, which is the American dream, right? And so the Trump administration, they care about the direction that the economy's going and how it's going to affect the midterms. And they want to see the economy and the real estate market affect so many different sectors.
It does.
So why not consider a 50-year mortgage to stretch out those payments and
what's crazy about
lower
the housing,
the monthly?
What's crazy about the housing industry, I'd have to recheck the numbers, but as of a couple of years ago, every time a house sells, at least in California, and this is the average, right? So if you're selling a house in, middle of nowhere, the economic impact will be less. But on average, every time a house sells, there's about $173,000 of economic impact that takes place between the lenders, the realtors, title, escrow, inspections, contractors. So it is a big driver of the economy. And so
Trump gets it. He's been in real estate for his whole life, so he understands it.
Yeah.
And so he's trying to figure out something. And so at first glance, I don't think it's a terrible idea. I mean, until you start to dive into the weeds and you realize, okay, for folks getting into this 50-year contract, it doesn't make a whole lot of sense unless you're just really eager to get into a home, right? And this is where you're going to live for the rest of your life.
Yeah, but that's not really where we're headed.
No, and you're paying I think they said for the first 10 years, you're paying nothing but interest.
Yeah.
And so you're really just renting for the first 10 years. And you're paying so much in interest, so much more in interest.
Yeah, and you're really only saving a couple $100 a month on average.
Right.
So the savings doesn't really seem to outweigh the cost.
It's an idea to noodle on, but I think economists are starting to dive into it and realize, okay, it's not the best solution to stimulate the real estate market.
What's really sad too is that so much of,
I mean, he tried to lower the rates. That's just not going as fast as Trump would like.
Well, even lowering the rates isn't having a big impact.
Correct. So
there's more going on there. But what's really sad to me, at least about people in general, when they think about buying a home or having a family or doing life, at least in the United States, is a lot of it hinges on the house. And this is coming from a guy who buys and sells houses, right? I just wish there would be less shame around and more action on living life. There's a lot of people that hit pause on their life so they can save up and buy a house. There's a lot of people who don't put off having kids, put off getting married until they can go and buy a house.
Sure.
And it's like, man, you only have so many days. Tomorrow is not guaranteed.
Yeah.
The house is not that important. Like in your financial plan, yeah, sure, it may play a role, but what's more important, getting married or having a house, having children?
Right.
Because
you're never going to have the perfect scenario. It's going to be, it's not big enough house. It's not the right house it's not the best location that I want to raise a family.
And this is something Valerie and I, struggled with because we were married almost 10 years before we had a kid, partly because of the economics of the whole situation. And now I'm looking at my friends who had kids earlier on in life, and I'm thinking, man, they just have more time with their kids and the grandkids that are going to follow.
Yeah.
And so there's a cost to everything. And so if you're feeling some shame about, hey, I can't begin my life because I have to pay off the debt or I have to have this done first. I've got to buy the house before I can have the kids. Man, there are one, don't feel guilty about that. Two, there are so many great programs out there that will help first-time home buyers. There's grants, there's low down payments, there's creative financing. There is a way. You don't have to wait till you're 40. You don't have to wait. You don't have to put your life on pause.
And I would also argue that you don't have to have the same square footage as your coworker or your friend. You don't have to have the same location, the same great neighborhood. Don't try to keep up with the Joneses. Just find something that you and your spouse and your soon-to-be children will be comfortable in for temporarily. Just jump in, start, like you said, live life. Don't always try to find the best, perfect, this is going to be our forever home.
Yep.
It's jump in,
no
find
such
a fixer-upper.
No such thing as a forever home. If somebody's telling you they're buying a forever home, they don't understand what they're doing, because those forever homes, they end up being costly, and then you have to downsize, and then they end up downsizing. So it's not a forever home.
And wouldn't you also say that we live in a culture, a society that's always in their efforts to keep up with the Joneses and have a certain American lifestyle, that they're going deeper and deeper into debt? And so it's the car payment, it's the credit cards, it's now looking at a 50-year mortgage where we're just piling up, and they take the lead from our own government, right? We're trillions of dollars in debt. And so we just assume, hey, this is the way Americans live. We just going deeper and deeper into debt to the point where we don't really even own anything anymore.
Well,
we just owe the bank so much.
That's a stressful lifestyle. Some of the happiest people I meet with when they go to sell a house, right, are the people who have lived well below their means.
Yes.
And they don't drive fancy cars. They may not take extravagant vacations, but their stress level is just so low because they don't necessarily have to worry about making the extra money to keep up that lifestyle.
Yeah.
So anyways, don't mean to get preachy here, but home ownership, it is still well within reach. Sometimes you just got to recalibrate your priorities.
Right.
What's more important, a big house that you're going to have friends at occasionally,
right,
or maybe a smaller house filled with children,
right?
And so again, what's right is up to you, but there are so many different programs and so many different options out there. You don't have to wait till you're 40.
So then you've now been hired to advise President Trump on the economy and real estate, okay? What? No, you've been hired, okay? You've moved to Washington. You're living near the White House. You're meeting with President Trump on a regular basis and you're advising him. And he says, "Hey, Johnny, I got an idea, okay? I see that we're struggling in the real estate market. What do you think about this 50-year mortgage to stretch out the payments? What do you think about that idea?" And Johnny, you would say,
I would say it's not a good idea. The only person that really wins in that situation are the banks.
Okay, then what's your other
What would be
idea?
my suggestion?
You can't just, if you're going to be in that position, you can't just say, "Nope, terrible idea, President. You're horrible."
Well, here's the thing. Here's
a better idea.
Here's the better idea is often not the politically expedient idea.
That's tough. He's only got 3 years left.
He's only got 3 years. He's got to set up whoever's coming next. He's got congressmen and senators, and he's got people that he has to please,
right?
Because they have to get reelected,
right.
Even though he might be done, they have to get reelected,
right.
or they have to have buy-in. So there's that whole political thing. But if you remove politics from it, if he and I were just sitting down and having an honest conversation, the number one thing that needs to happen is you need to build more. You need to have more housing. The more, it's classic supply and demand. If there's more housing, then the prices will fall, and then that improves affordability. You don't need a 50-year mortgage. You don't need a 3% interest rate, right? You don't need to be making $500,000 a year. Wages don't necessarily have to go up so much. You just bring down the cost of homes by increasing the supply.
How does he do that?
So you can make it easier to build, like less regulations. You can incentivize the builders. You can unlock areas that you're not allowed to build at, right? You could maybe give cities or counties or states tax benefits in order to open up these lands or reduce the fees. Like, there are so many people out there who want to even just do some work on their house, but the cost of a permit on their house.
Yeah, it is. That is just ridiculous.
It's just a massive money grab. And imagine what it's like to build an entire development.
Right.
And so if you reduce those fees and make it easier to build, reduce the regulation, I'm not saying make it unsafe, but let's cut where we don't need. There's too much. There's just too much. A lot of what the U.S. had going for it historically was it was new land. It wasn't like Europe where you were building on top of everybody.
Right.
And that made it easy to grow and affordable to do that. And I think there's still a lot of ways that could happen to bring down the cost of housing.
In the greater Sacramento area in Northern California, where would you like to see more development? Where do you see areas of potential growth that you drive by it and you say, "Hey, what if they built another development over there?" Is there areas in Northern California that really need more development more than others, and you see where they could do that?
So when I think of what I'm seeing unfold up here, because Valerie and I have been up here since 2018, and even in that short period of time, we have seen traffic get noticeably worse. And that's people don't like that. People don't like spending time in their cars just to go to the grocery store.
65 is a disaster.
65
It's not
is a
even rush
disaster.
hour. It's not morning drive and afternoon drive. It's nonstop.
Yeah.
Sunday morning.
And so that would probably be the thing that I would do is figure out a way to connect the 65 to the 80 side.
So you're talking about more infrastructure.
More before you start piling on more houses, have the infrastructure. It's like have the infrastructure so it can breathe easily. And that would probably be my first thing would do the infrastructure. And then
Did you say connect 65 to what? To 50?
Sorry, to 50. I said 80, but to 50.
Oh, connect 65 to 50.
I think that would help out a lot because now people could live in Rancho and they could drive up here. People could live in Lincoln and work in Folsom. And I think that would really help.
Yeah, that's a decades project.
It got shut down, I think, in the 70s or the 80s.
Yeah.
But there's things like that in terms of that would help locally. Otherwise, it's just going to be more of a sprawl. So you either have to make it more efficient for people to get from A to B, right, where they are now, or it's just going to be a sprawl. And so I've heard talks about how Lincoln might someday be bigger than Roseville.
Oh, sure. Yeah.
And so we'll see how that, plays out in the coming decades. But that's the number one thing is it's classic supply and demand. And I don't think playing with interest rates, playing with loan terms is going to override the economic fundamental of supply and demand.
Okay.
So
So there you go, President Trump, if you're listening, there's your advice. Johnny Jennings is willing to remote, right? Virtually, to give you some better advice than a 50-year mortgage.
50-year mortgage. I think I haven't done a lot of look into the portable mortgages, but that sounds interesting. I know other countries do it. That's where if you have a mortgage on your current house, and let's say you have the 3% interest rate and you want to move it to your next house, you can then move it to another property.
Oh, wow.
So they're playing around with that. I don't know much about that. But what I will say for the whole Trump situation is at least they're trying to figure things out. They're tossing ideas out there. And then they do take action on things. Whereas before it's always like promises. We'll say we'll do something, and then the politician gets into office and nothing changes. You never hear from it.
So here's a question then: if they do roll out the 50-year mortgage, do you think that's obviously going to help realtors, right? And real estate teams short term.
Yeah.
Could it have any negative effects on the real estate market?
I think it would have the similar effect to what low interest rates had. So short term, you'd see an increase in people buying and selling houses. And then once that initial boom is done and the people who are open to a 50-year mortgage, that's saturated, then you're just going to see them sitting in place because they can't afford to sell.
Right.
And so I think you'll see a little bump, and then it'll be where we're at right now, where people don't want to sell their 2-3% interest, their house, because they have a 2 or 3% interest rate, and they can't. Not only do they not want to give that up, but what they're really saying when they don't want to give it up is they can't afford to give it up. They can't afford.
Right. Sure.
They can't afford to trade in their $2,000 a month mortgage for a $4,500 a month mortgage.
Yeah. Makes sense.
Yeah.
Hey, I also saw this, and I thought this was interesting, and I wanted to get your expertise on it. So they're saying that homeowners, no, where is it? Hold on. It's asking the question, off-MLS, which we've talked about a number of times throughout the past months. When a property is off the MLS, it's not listed on the MLS, those transactions cost sellers thousands.
Depends on who you talk to, but yeah.
So can you explain that a little bit better?
Off MLS, so it just means the realtor is not putting it in the MLS. And why the MLS is so important is it's part of the traditional realtor's 3-prong approach to selling a house, right? We call it the 3 Ps. They put a sign in the yard, they put the home on the MLS, and then from there it goes out to the major real estate portals. And then the 3rd P is they pray that house sells. And that's all that they're doing is the 3 Ps. So if you take one of those Ps away, all you're left with is really the sign, or at least that agent's word of mouth. And so what we do at Made for More is as soon as you agree to move forward with us, we start pre-marketing your house. And one of those things is an off-market option. So we have a black book of over 100 investors. We'll send your house out and see what kind of cash offers we can get. And then if you don't like any of those cash offers, then we move forward with the on the MLS version. But some people like the cash offers if they're going through a nasty divorce, if they need to relocate quickly for work, if the house will not qualify for financing,
right?
If maybe something terrible happened, like a death happened in the home, and not to get gruesome or anything, but like a bad death, and they don't want that home necessarily on the open market, sometimes it makes sense for somebody to take the off-market option. But what's happening is essentially Zillow is butting heads with Compass. Compass recently bought Anywhere, and I forget the entire portfolio of brands under Anywhere, but it's like Coldwell Banker, I think it's Century 21, it's Better Homes and Gardens, it's Sotheby's. Like it's Anywhere was the largest residential real estate company in the country, and now Compass has bought it. Compass was already large before it purchased it. So now Compass is trying to corner the market in terms of these off-market properties to shut the Zillows, the Realtor.coms out. And if you talk to Compass, they say, hey, our clients like it. Their houses sell for more money without the hassle by not going on the MLS. So they're saying it's a benefit, but then they also have a reason to say it's a benefit because they're the ones doing it. And then for Zillow, they're saying, hey, it is not a benefit. It costs people money. NAR is saying it's not a benefit. It costs the clients money. Where do I land on that?
Yeah.
I think ultimately it does cost the clients money. I don't see how you can sell a house to a fraction of the market, even if it's 50, 60% of the available market, and still achieves top dollar 100% of the time. I don't know how you can do that, whereas one of the things that we do with Made for More is our whole goal is to increase the exposure of your property.
Yeah.
Right. So we put it on the MLS. We run ads. We run ads on social media. We run ads on like digital ads, traditional ads. We call throughout your neighborhood. Like our goal is to expose that home to as many people as possible. And by having an off-market listing, at the end of the day, no matter how you slice that pie or how you crunch the numbers, that is not happening. So for most people, I don't think it's a good option.
Okay. All right.
I think you're getting lied to by Compass.
So if they want more information on all that you had to say today and more, and find out how they can get one of those cash offers that you were just talking about, what should they do?
If you want a guaranteed offer, if you're curious what your home is worth, or if you want some access to some incredible programs, if you're looking to buy a house, just go to madeformorerealty.com. You can look us up. We have over 1,000 5-star Google reviews. That's madeformorerealty.com.